Hey, hello everyone, and welcome to Elevate Cafe. I'm Chris. Let's take a look at Saturday morning. I usually do like a weekly review of the markets, take a look what happened last week, and I won't keep you long. We'll keep this nice and short. But yeah, the S&P has been correcting in here. We've had about 3.5% loss last week, and we've incurred about 3 or 4 weeks of losses. We're about, I don't even know, like 8-9% maybe from the highs in the S&P. So just a kind of a garden variety, I would say, pullback type of correction. In here you can see my weekly time frame and the count that I continue to kind of follow along. In here I think we are in the final stages of a possible flat formation, and the C wave, it's probably kind of close to running its course. On Friday we've gotten a pretty decent rally after some heavy price action during the day, and then once again it seems that the traders didn't want to go home being short the market. Now something similar happened last Friday as well, only to counteract on Monday with a pretty heavy sell-off. So there was a total rejection of that buy. It happened across the markets. And here we are the following Friday, so yesterday, with another almost like a reversal type formation where we do close, where we sell off during the day, and then towards the end, we close towards the top of that price action, creating almost like a little hammer. Obviously, this is not enough to get anybody all bulled up on the market. It is something definitely to watch. I've noticed for the past several days, especially on the futures market, you can see, and even in here, you can see like there's like some longer wicks coming from the bottom, which means that the bulls are stepping in at these levels and trying to support the market. The bears, definitely have the upper hand because they're, continuing to pummel this market every time it's trying to advance, and we really haven't broken any significant trend lines. We're not above the 50-day and not above the 20-day moving averages, so we're still in this environment of weakness. But we would be watching how we're gonna continue to perform for the next 3-4 days and see if we're going to continue to get some buying. It's very important that we don't lose the low of this candle, to kind of keep its significance and, start to think that probably that C wave of the correction, it's over of that flat correction. So let's look a little bit at the wave count in here. I'm continuing to look for this wave 5 of a larger wave 1 before something that's maybe a bit more extended would begin. I don't think the structure from this low to this high is complete. I would assume that would probably start to complete towards the top of this channel. So I think there's a bit more to go on that. So this is my weekly view, and you guys already know kind of what's my longer term view. And this is not only mine or anything like that, but it's a it's a big wave count, obviously, going from the big depression here in the 30s, in the 1930s, and then you go in this wave cycle 1. We're in a big large super cycle. I mean, these are just big labels in here, but I still think we're in a pretty decent heavy bull market in here with all the technology and everything. So again, we're looking at the wave 1 formation, and then a little bit of a pullback, and then begin on the next wave higher in that larger wave 3. So let's take a look also at the daily charts a little bit in here and see what they're telling us on the S&P. And okay, what happened here? Give me a second. Yeah, so we're looking at the daily charts. I just kind of had to reset something, but this move from this low in here at about whatever this was, 57.73, all the way to this high, it doesn't seem to me like that was a decent 5-wave move, and to finish a structure you would kind of need that. Now I've seen markets where they look almost like a three-wave, although if you look probably inside some of those structures, you can see some type of an ending diagonal there, but this doesn't match any of that. So I think that's a three-wave move to new highs, creates this wave B, and then, you come back down. So better probably suited as a flat. I put this on Twitter too, so you're basically very close to this 161.8 of wave C versus wave A, which is kind of where you would want to see, and this would qualify, since we made a new high, this was qualify as an expanded flat. B wave made a new high, and then C wave came below the origin of the wave A, so that's an expanded flat. In a running flat, only B wave goes up, and then C wave stays above the wave A, and then you have the regular flats. But this seems fine. Now, obviously, you got to look for confirmation, right? I'm not going to just say, well, okay, this is it, and we're moving higher. The reaction, it's normal. I mean, it was expected. It kind of came from these levels. Obviously, we also have some other levels in here, right? Of previous. I mean, if you look back in the summer of 2024, before we got that August sell-off, and then again we tried to break through that at the end of August last year, and now we're back at these levels. So you also have horizontal resistance here, right? So you almost have like a nice confluence of levels. You have the 161.8, you got horizontal resistance, and then you get this nice reaction. You break below this low, but also we're going to take a look at the moving averages too, right? You also have the 200-day moving average coming in there. So this is a pretty strong zone where, if you were a buyer longer term, or if you're an institution, right, you're thinking, man, this is a pretty good deal here. So might as well just try to defend this level. Makes total sense. And I think that's what they did. Now, will we get a continuation? We'll see. If you're breaking below those levels, I think things are going to get much tougher, because then you're starting to look, at about 200%, 261 for extreme flats. It's probably not going to work out. But I'll keep this on the radar. We'll continue to monitor it. And what I would like to see is, obviously, now if we do bounce from here, we always watch the retracement, kind of going back up. I gotta secure that a little bit better to that low, but it would be probably somewhere around 59.50 or so, where in case we do bounce, right, that's going to be the level that's going to be interesting at about 61.8 retracement of this entire decline. And so let's just keep that in mind, 59.50, because we're going to take a look at the moving averages. I'm assuming, maybe the 50 days somewhere around there, or the 20-day. And then, if we do bounce up there, that's going to be important, right, for the bulls to continue to hold that, or to continue to push through that, and the bears will probably try to come in and say, no, we're beginning the next leg lower. So that's kind of my plan going into the next couple of weeks in here with the S&P 500. So let me, since we're here, let me take a look at that. And we're going to go, actually, let me go on the daily really quickly and see where that is. So you see the 50 days of 59.82, but I would go also on this chart on my daily kind of structure. So you see 59.80, 59.30, right? So if you do a 61.8 retracement, you're probably going to fall somewhere into this neighborhood right here. Okay, and that's where you will find resistance. So we will be watching for that. You can see this is the 150-day moving average. And if I go over to my weekly time frames, this is our 200-week right there. So they try to close below it, and they got some troubles doing that. And pushed the market back, and we've had nice reactions every time we approach this one today. So this is a big level for the market. Again, you compare that with the horizontal, with the fibs, and it warrants a nice bounce here. We'll see if we're going to get it, but definitely one of the and even on the weekly volume, right? It almost and then you look at the bear sentiment, that's out there, the fear and greed index, all of those indicators. And the VIX kind of pushing, I think whatever it was, 27, 28. So we're at a good level where we could stage some bounces. So we'll watch this, but it could be just one of these declines in here, and then if next week what I would like to see is some kind of a week that does that, closes up near those levels, and then that this was probably the bottom, and then then you're looking to again go back and make new highs and move higher. So that's my plan looking at this market. If we take a look at the Nasdaq Composite, right, this was hurt, and we'll take a look at the Bitcoin too. Just hopefully you guys are a bit patient. I'll be on Bitcoin too. I know there's a lot of interest on that. We're moving. So we closed below on the Nasdaq Composite, right? Was the heaviest market hit. Actually, the heaviest one were the small caps. I think those are like 17-18% of the highs. Nasdaq Composite also pretty decent. We lost 3.45%, but it's in a similar type of a structure. Right at the 20-day moving average. You had a couple of closes before, and then you were able to kind of stage a recovery. So we'll look at that. Dow Jones, this looks even better. So this is kind of what I would maybe look at it. I think I put it on Twitter, just as a nice ABC, even just as a standard flat formation. You're not making a new high, you're not making a new low, and right at the 200-day here looks interesting for sure. This market did not lose as much. Obviously, there was a turn towards value from growth. Now, Russell, this was a troubled market. But here's the thing here. You see this green line? That's the 200-week moving average. And I'll show you some longer-term charts. I think that's a big level. It's huge. And they fought with it in the bear market of 2021, 2022 in here. And tried to break below it several times, and then we created this huge base that then we tried to move away from, and we lost the 200-day, but we're coming back into extremely important support zone of demand, as they call it, and then you're very close to that 200-week moving average. And if I go back like 15 years or so, I mean, this zone, mind you, we had the COVID crash, and that was an extreme event. But other than that, the 200-week, it's one of the kind of the biggest longer term trend averages you can have. I think it also equals like the 46-month average. So you're looking at this, and you're basically right there. And also you got to look at the move from the high. Yeah, you did come up in an impulse, then a little bit of a flat in a wave B. Probably this is a wave C by the sharpness of it. So I'm going to be very interesting coming into this support, what happens here. But definitely, eyes will be peeled on this price action, and, looking for, again, like if we go and take a look at the daily on IWM, you see how bulls have been coming in for the past 4 days and trying to hold these levels, and also coming up on volume. But there's a lot of damage here, right? The RSI is at 30, PPO, it's still, it's got to curl back up. So this market will have to do quite a bit of work. But I don't dislike it here, and I will watch it. Doesn't mean I'll buy it. I need to see a lot more confirmation. But the structure here seems interesting, right into that support, right into that closer to the 200-week moving average. So it makes sense. All right, let's continue to go. I'll have a couple of other charts, and then Bitcoin in here on the weeklies, and I'll come back and forth with this with the wave count as well. But look, you sold off into that 40-week average. We held it. We didn't quite make it to 72. We knew that once it breaks that support, it's going to be difficult. And then we had an announcement from the White House regarding the Bitcoin strategic reserve, some other currencies in there, or coins, however you want to call them. And, we got a nice bounce. If we go up on the daily, and I think it was this one right here, right? And then, we came back. That kind of gain was quickly washed away, and I was expecting, based on this, the expectation was that you were going to continue to go, and we didn't. So that's again, I think that's an important signal, that this was actually not necessarily a failed move, just a quick kind of market reaction. But since we didn't go lower immediately, or after a couple of days, I consider this levels here important at about 85. So I think, there's a chance, especially if the market recovers, the equity markets, that we can move higher from here. We got to regain some of these averages. So again, I'm not going to pay attention to the news and just say, because you don't know what's priced in and what's not. And maybe longer term it's very important and it's valid. I'm sure there's different talking points on that from all kind of people that follow Bitcoin very closely. But just from a pure price action perspective, I got to see a bit more, and that's got to break about 90K and maybe even about 95 before I would start to get interested in Bitcoin, and start to get aggressive and start buying it more, even from a swing term perspective, right? But right now it's still too tired. It doesn't look very strong. It's just kind of sideways, so there's not much to do. However, on the weekly charts, nothing is really wrong. This could be, again, just another wave 2. So let's take a look at the wave counts right here. And I talked about this last week. Since we did lose, quite a bit from those highs, and I don't think it qualifies as a fourth wave anymore. So we got to go with the wave 2. And I've explained also, the possibility of this top here being a wave 1 red, which means that a much larger wave 2 can be underway. But that's that's kind of my secondary count. My primary remains this, where you're looking at this purple and a wave 2 pullback on this weekly, followed by a move, back towards the top of this channel at some point, once we get back above 99,500. And then on the daily, I know maybe some of you would like me to count this decline. I find it quite useless. It doesn't matter. You can put what kind of label you want. I don't think it's that impulsive. It's probably more like a corrective move. It could be like an ABC for an W, then an X triangle, maybe another A triangle in B, maybe one more push lower in C, just to kind of really flush people and then go. However it wants to go, until it really breaks back above these levels, there is not much to do, right? So no matter how you count it and how you look at it, price has to prove that this is working. So we have the declining channel. We are at about 38.2. There is room to fall further if he wants to, and there's good defense again on approach to these levels. I'm not going to short it here. It's silly. It doesn't do anything for me. Doing a short, I guess probably a short would have been on the break of these levels at about 93, once you had that little rejection up there. But now, what's the point? So again, you could be prepared, in case it comes towards 74, 75, it will be a pretty big level of interest right up there, bottom of the channel, 50%, what have you. But it doesn't have to, right? It doesn't have to. It can very simply just kind of turn from here and start to move, break the channel, break 99.5, and then continue to gain strength. So we'll watch this, but this is the wave count. And I'll keep this at the forefront, use this as my guide, and look to try to trade maybe a larger third wave advance in the Bitcoin market. That's that's the look, the RSI here on the weekly, it's also right at 50, right? So pretty beautiful level that you want to stay above in uptrends, and you kind of combine that with some of the levels I mentioned there, and it's a good decent level to kind of find support and bounce from. right? We're not anymore or kind of overbought or on the high RSI. We're not anywhere oversold that I wouldn't, dare even like say, buy it, because you never know, right? But when you have a 50 RSI on an uptrend on weekly, I think that's that's an important level to watch. So we'll watch it. Let's jump over now and take a quick look at the dollar. Dollar, it's been having one of the worst weeks since the week of November 7, 2022, when we had a 4.14 decline. This week we declined 3.56%. Again, coming into the 200-week moving average. This should be somewhat positive, I guess, for the risk assets, right? You don't want a strong dollar. So I guess this is in the plus column for maybe some bullishness in the market. But look, a lot of, European and outside markets, even China, I think Japan. There were markets that for the past 2-3 weeks, they've been making new all-time highs. And a lot of the money, has been kind of flying there. Maybe, it's kind of for the first time in a long time where, the foreign markets are actually outperforming the U.S. markets by quite a bit, right? I don't have the chart prepared for you, but it's been something like that where you go, you go up the relative risk, the relative ratio between the U.S. and the foreign markets, and then now all of a sudden, this has been happening for a couple of decades or so, and then now all of a sudden it's dead, and it's like, what's going on here? So there's a trend somewhere, and that's been in the in the markets outside the U.S. So the dollar obviously had something to do with that too, because when you get a weaker dollar, those markets will benefit, and I guess obviously it's got something to do with what's going on in here, on the economic side, on the politics side, with the with the trade war and all the threats and negotiation tactics, whatever they are. People are not comfortable, holding risk in here, and it's almost like you're walking on eggshells here. There's no security in terms of, not that ever is, but it feels just very bouncy and very, very trappy, very very easy to get caught on the wrong side here. One day we're putting tariffs, the other day we're saying no, we're giving them another month, so it's very hard. So people look for a bit of stability. Anyhow, that's the dollar coming into a little bit of a support, but I would expect maybe a little bit of a bounce. But now you're below that average, below the 40 week. So, the expectation are for further weakness in the dollar. Gold benefits in here. Good weekly volume, remains in an uptrend. Just look when the gold broke out. Look at the volume that it had when it broke. That's what you want to see from stocks, from and sometimes they'll fail, but this time it didn't, and it was worth a try. I didn't get long on that break, but nice formation in here, huge consolidation, and the trend just continues. There's nothing really to do here, but if you're a longer term, maybe watch this 40 week. If you're shorter term, I guess I would watch the 10-week average. And this is just I don't have a count, but I still think we're in in the middle of a larger third wave in here for gold, and it continues to look nice. And then we're back at the beginning with the nice holding that 40-week average. So anyway, thanks for watching. You know what you find me, ElliotWaveCafe.com, Substack there. That's where I do all my daily videos, all my updates. I put comments in the chat, what I buy, what I sell, and it's extremely cheap. If anybody wants to give it a try, have at it. I would be happy to have you there, and otherwise, I'll see you on YouTube, and we'll keep this going. Thanks for watching. I appreciate you. Don't forget to hit that thumbs up and leave a like or whatever. But I'll see you next time. Bye bye.